Hello and welcome, everyone. I'm excited to be here. Thank you for being here. We are looking forward to preparing for the Trump era markets, and today we have a special guest, a dear friend of mine, Tom Sosnoff, who will be joining us the second half of this recording. So with that said, let's move forward. Got a couple things we've got to go through, some house cleaning. I hope you like the presentation with the President of the United States and the happy-go-lucky Dems and Republicans getting along so famously in this cartoon. And I like the fact that we had selected this rally to restore sanity, but march to keep fear alive. Now, it's kind of funny, the stock market seeing some significant gains, and that makes a lot of us happy, of course, especially those with retirement funds, 401ks, and of course volatility traders. We need the markets to move, and that's kind of what the neat thing about getting Tom and I together. We have different means, but a lot of times we have a very similar outlook at the end of the day. So with that said, let's get started, shall we? Please take a moment to read this very important risk disclosure statement. Of course, trading is risky, and again, past performance is not indicative of future results, and this presentation is educational in nature. So there we have it. So we're pretty good there on all fronts. All right. Well, we want to welcome all traders, old and new. And I know you may have seen this photo before. This was taken before the holidays, and I was teaching my grandson the overall. He wasn't learning a darn thing. He was seeing the lights flashing, and you might see that little one of my favorite snacks. If you play golf, you'll see the cheese and peanut butter cracker in his fingers. And that's about the only reason why he's got the big old smile on his face, because he's watching Thinkorswim. He's looking at my day trading up here, and he's looking at the lights flashing around, and all he really wants is the cracker. But anyway, I wanted to introduce you to and all traders, whether you're experienced or whether you're just starting out. Also to keep the theme of a new year, we have a new color. The color theme is greenery. Greenery is the color theme for 2017. So probably it signifies the beginnings, new beginnings, and how appropriate with a new president and a new president or Republican-led government. It's a fresh new year, healthier food resolutions, growing vegetarian trends. I don't know, grass. It's pretty green down here where I'm located in South Florida. In the outdoors during spring and summer. Kind of funny, it's also the color of my book and the color of money. Mastering the Stock Market. This is a fantastic book. If you do not have it, I urge you to get this on Amazon. It has all types of indicators, how to scan using TOS, seasonality, sector seasonality for stock traders. I go through a complete teaching and a whole chapter on Person's pivots, the PPS indicator, as well as volume indicators. And a lot of you have seen me at different conferences, trade shows, or maybe at investment clubs. We've talked about specific volume indicators, and we're going to go over that today because it's very important. I still believe volume is the lifeblood of the market. So with that said, the color of greenery. Anyway, what we also look at, by the way, is, besides looking at the market, seasonal trends in the market. I don't want to underrate things, but there's a few really significant seasonal trends and different ways to trade the market. By the way, I introduced this a few weeks ago, and what this represents are what I put out every month, and we, in our weekly advisory service, we put out not only what sectors are strong, what sectors are weak, but also high probability trades in the commodity sector. So, and as spreads. So I did this before. People said, hey, what happened? And there were some technical difficulties. I wanted to put it out there again. On or about April 12th, you look to buy April crude as a spread. You sell heating oil against it. You liquidate before 2/16. That's February 16th. Kind of funny. This is an actual, for a couple, many of you might, if you've been trading for a while, you remember when the Swiss National Bank came out and adjusted interest rates and the market went crazy. Well, quite frankly, buying the Aussie dollar and selling the March Swiss franc, or buying the Canadian dollar and selling the Swiss franc, was an incredible windfall profit based on that. And it's not something that happens all the time, but this spread is actually just has a seasonal tendency. And what we do, and to look at my seasonal trades here that I put out every month, and these of course are the commodity spreads for January, for the month of January, right? The criteria is they have to have more than 25 years of tradable history, number one. So that's the number one criteria, is that they have to have over 25 years of history, A. B, they have to have 80% or greater of success rate. So basically we need to have 22 years it's won versus 3 years it's lost, and on a 25 year to make over 80% probability win percentage. Does it guarantee that future results are going to happen every single year? No, but it's at least an idea of the type of strategies we like to incorporate in the markets. Now, a lot of you who trade at Thinkorswim were wondering, how do I get this stuff? Well, real simple. If you use on Thinkorswim, if you wanted to track the performance, there's a couple things that you need to do. And this is what we were dealing with the last time we had the issues. Up in where you select your product, forward slash CL. Now, if you want to get specific contract, and if it's April, the symbology letter for April is J, and then the year 7. Now, some platforms like TradeStation require the 17, so you would, at least with Thinkorswim, forward slash CLJ7. So that means it is, and that's really poor writing, I apologize. Or what you can do is just go forward slash CL, that's crude oil, hyphen, forward slash heating oil. Now, that is a typical spread combination, and all you're doing is you're looking for the first contract you put in this case is CL. You are looking for the spread to move up. Now, if you'll notice, this is not a bar chart, it's not a candle chart, this is a line chart. So you want to go up to, might be hard to see here, go up to your tab, go to Style, and put a line chart. You don't want a candlestick chart. You want to use a line chart, and a line chart subscribes to a typical type of movement where you get to see higher. It just connects the dot from one close to the next close to the next close, and then makes a line through it, really. But it subscribes to trend line analysis, as I've just drawn a supporting trend line. You can also look for higher highs and higher lows. So if you are looking at this spread, you want to follow this and watch the spread, what we call widen or become more positive. It goes from less negative to more positive. You're looking for crude oil to outperform heating oil relative to the two prices. All right? So if you're not interested, at least now you have a little education of the other ways of trading the markets from a seasonal perspective, other than just simply one of my favorites, which we're coming up to, is that on or about the first week of February, give or take a week, sometimes at the end of the week of January, the last week of January, the first week of February, energy, crude oil, energy stocks. It's exciting because typically that's when we see a boost in that sector. So we're entering a seasonally strong period of time for energy, and that would be kind of paramount if you're looking to go long crude oil relative to heating oil, right? So here's another one, as we were talking about the Aussie dollar versus the Swiss franc, same thing. Forward slash 6A is the Aussie dollar, hyphen forward slash 6S against the Swiss franc. Now, this might have a couple things to do with it. All right, you can also do the Canadian dollar because they're both commodity-based currencies, right? And so you have commodity-based currencies that might go up, and the Swiss franc is measured against, in past history, against gold. So what happens in this time frame of year? Well, sometimes we see gold peak out in the first week of February, and we see commodities rise. So we're looking at the difference of those two currencies. And so if you're a currency trader, may want to at least watch this relationship. Real easy to do. Go up to style, change it from a what? Candlestick or a bar chart to a line chart. And once again, what you're looking for is you want to see the difference in price appreciate. And that would mean that if the line chart goes up, becomes what we call more positive up the price scale, okay? If the line chart becomes more positive, then that means that the Aussie dollar or the Canadian dollar, which would be /6C, that would be going higher than the Swiss franc. Now, what if the Canadian goes down and what if the Swiss franc goes down? The spread will still go up. If the Swiss franc goes down more relative to the Aussie or Canadian, right? So it doesn't mean that directionally this is working. It just means one is outperforming the other. So these are kind of like trades that just started to work. They are a seasonal factor, and starting off January, these are the kind of things that we wanted to go and kind of look at ways to trade in the new Trump era. High correlated or low correlation. And these seasonal trades, to be honest with you, crude oil on its own might not be a direct Trump type trade, so to speak, and nor would these currencies, except for Donald Trump. It has been tweeting out lately about the dollar is overvalued. So if the dollar pulls back a bit, perhaps we get, a fluctuation in the foreign currency arena. So new Trump era will have an effect even down to these seasonal commodity spreads. So I wanted to bring that to your attention. So different ways to trade the market. And with that said, different ways to trade the market, who, what, where, and when we trade has changed. And that's kind of some exciting news that we're going to bring to you. Number one is the fact that companies have now changed, products have changed, time periods that we trade changed, platforms of trade that we trade with have changed, mobility. We now trade off an iPhone, thanks in part to Tom Sosnoff, whose team helped develop the mobile application. And again, location. No offense, but you could trade in the airplane. The stock symbol is Wi-Fi, but the application is called GoGo in flight, right? And I'm sure everyone, if you've flown recently, you've used that. Not that you want to day trade E-mini S&Ps 30,000 feet above the air, but you can check your positions, and if you're near a profit objective, liquidate or maybe add to positions. You have that availability, and that's changed over the last 10 years. What used to measure value, and again, a key word here is condition, is not as applicable in today's trading world, and I'm gonna validate this statement in just a minute. This is a very powerful and important statement. What we used to measure value and condition is not as applicable in today's trading world as it was 10 years ago. Some of our technical analysis tools have been less effective in the marketplace, and I'm here to share with you why. So the new Trump era, we're going to be expecting some volatility. We're going to see directive changes. We're going to see new laws, regulation changes, a relaxation most likely in Dodd-Frank. I don't think anyone wouldn't see that coming, right? And that's going to be very powerful for more profitability for Wall Street and banks, whether they're regional banks or multi-international banks, and of course investment banks like your Morgan Stanley and Goldman Sachs and JP Morgans, just like looking at PNC or Huntington or Zion or your Bank America or Wells Fargo. So relaxation might be able to get the ball moving and get what we call a little bit more fiscal stimulus in our economy, rather than relying on the Federal Reserve to do complete zero interest rates, which, as we all know, hasn't really been as effective. It was an effective tool when Ben Bernanke enacted it. Remember that, to help stave off a financial global collapse. But at this point in time, we need something more. So what is it that's really changed in this new millennium? Well, a lot of us use price indicators, and many of you are familiar with my PPS indicator. Moving averages, oscillators, indicators, stochastics, MACD, for example, my favorite tool, Person's pivots, and a lot of you also use Fibonacci to help identify support and resistance levels. Now, volume analysis is in heavy green and underlined because a lot of people have abandoned using volume because they've been duped, fooled, or it's not been something that's been effective or as efficient as it once was maybe 10 years ago. But I think we need to be looking at tracking volume trends, and that's the key word. A lot of you have probably seen me at trade shows talking about the next indicator I'm going to present to you. If not, you're in for a treat. Another thing that we look at to get an edge, and again, no one indicator is perfect. No one style of analysis is 100% perfect. But when we can combine a few different non-correlated indicators together, I think it helps improve our odds of success or get maybe a more relevant picture of the condition or health of a market. And with that said, we have conditional type of analysis that we like. The condition of the market, which we call breadth, which the condition is how many stocks are advancing versus declining. How many stocks are at 52-week highs versus 52-week lows? How many stocks are above the 10-day moving average? How many stocks are below the 50-day moving average? And we can look at conditional analysis. We can also look, as an option trader, volume increases, unusual volume activity compared to the open interest of a strike price. So open interest is very important. And then we have what's called consensus reports. One I've been teaching for 30 years and using myself for over 35 years is the Commodity Futures Trading Commission, what we call the Commitment of Traders Report. Another one a lot of you are familiar with as stock traders is the American Association of Independent Investors. And then again, we've got rate of measurement, the fundamentals of the market, right? Earnings, PE, PEG, etc., etc. But I want to make sure that you're all aware, no matter who you are, how long you've been trading, just remember, maybe this isn't accurate as far as equal by milliseconds, because some hedge funds and some companies have a little bit faster, broadband speed or something of that nature, and to some degree trading hours. Some of you can't trade in the pre-session hours and the post-session hours of the market. But we pretty much all have equal access to the open, high, low, and close and volume of the market. So what makes the difference? And why do we need to, what's changed and why do we need to alter some of this stuff? The funny thing is if we all have equal access to this, we're obviously, some people are getting better or faster, if not analyzing the markets in a different content, right? So let's take a look at something real quick. Volume conditions have changed, number one, and I always have considered volume to be the lifeblood of the market. But in the last 8 or 9 years, a surge in popularity, and you, if you're an option trader, are guilty of creating this issue because you're no longer really trading the underlying product, you're trading the derivative of the market. And there's ETFs now, and there's institutional dark pools, and all of this has helped alter volume trends or mask, as I say, the volume trends. I think what was once considered most important to a trader to become profitable has definitely changed. I've gone through the country, I've been around the world, I've given presentations, I've polled the audience, and I've asked how many have been duped on volume. And a lot of people raise their hands and say, yeah, it's confusing because the market goes up and the volume bars go down, and I don't think it's going to continue, and it does, and I stop using it. Well, volume continues to be important, but I think it's now less transparent, as volume is found in not only the sectors of a stocks and the ETFs and other derivative products, just like options and the inverse ETFs. I mean, this really has become an incredible amount of products that's been laid out on the marketplace. And so one doesn't need to just trade Apple. You can hedge it against the XLK. You can trade Apple options. I can do a synthetic buy a 120 call, sell a 120 put. Baby, I am net long the market, and that volume trade doesn't show up in the histogram of the underlying chart of Apple, right? So let's take a quick look at what I'm referring to and referencing. This year and going through since 2012, again, look at this chart here real quick. The tool that we're looking at is OnBalance Volume. Now, we helped popularize this through, I don't know, the last 10 years, 8 years or so. I wrote about it in my book. We've been teaching about it since in 2008 at the various trading conferences. The money shows, for example, the Traders Expos, and I'm sure some of you have seen it, and helped popularize a study on Thinkorswim because of these efforts. Now, I think what we've seen, and you can clearly look at this trend of the market at prices going up, and at this point that the market starts to break out, you can clearly see the zigzag of higher highs and higher lows of OnBalance Volume. While this trend tool is moving up, there's also a little moving average component that I overlay on it. You can clearly see that the volume histogram is moving down. In fact, in 2016, basically, as this market rocks to the upside, OnBalance Volume is moving up and the volume's moving down. And that, I think, is a great example of what we've been seeing confuse people. Now, let's fast forward and look at the Russell here, because after the elections in November, and I want you to know that this is the chart from the election. Get that back, sorry about that. What we were looking at, and remember I'd mentioned breadth before, advanced decline. This is the advanced decline study. It's, as you can see, it says ADC, advanced decline comparative ratio on the Russell, RT. So basically out of the Russell, which is 2,000 stocks, right? We look at how many stocks cumulatively are moving up versus down. And as you can see, as the market came through to a person's pivot, and by the way, this has not been added yet to Thinkorswim. We're in the process, but these are quarterly, not monthly, not option expiration, but quarterly pivots that we've wrote about and using for decades. A lot of people seem to really like and migrate to using that, but this is part of my brainchild, was looking at markets in the terms of financial quarterly, not just option expiration time periods. But it's ironic that the market came right after the election, puked right down to the quarterly support, and as it bounced off of that level, we saw an uptick in the breadth of the market. More stocks started to go rise in association, causing the rise in the price. But look at this OnBalance Volume indicator. Holy moly, it is right off to the races. Because it's just like a spread chart, a line chart, it does have the ability to be used as trend line breaks. You can also use it as identifying higher highs and higher lows, so and supporting trend line analysis. So it's a really neat tool the way you can use it even manually. But you can clearly see, and I'm going to get rid of all my writing because I got like the John Madden problem here. And if you can take a look, clearly this thing is in launch mode, right? The breadth is in launch mode. And if you ever go to look at my Twitter account, and it's on personsplanet.com, you will see where we talked about, guys, it's time to get loaded on the Russell. We were very bullish the Russell at that point in time based on these conditions. Now, here's the deal. If you're still using the volume histogram, I mean, I'm not making it up. That's the volume histogram. It was going down. I mean, it's got a couple days of launch to the upside, but after that, the meat and potatoes of the market's still moving up, and people were saying, you know, it's not going anywhere. Quite a divergence, wouldn't you say? The volume's going down, OnBalance is going up, a divergence scenario. So I'd have to point out to you there are some things that are happening in this world, and a new way of looking at the market, which I think I created this as a private indicator, and we'll just disclose a little bit of what we can do with volume right now. This is a chart that goes as of this week, and we're going to go back a little bit, and we're going to look at the difference, because while on-balance volume certainly has its benefits against just volume histogram, and you can find this if you're a Thinkorswim customer right on Thinkorswim platform. I'll show that to you in just a second. But, last year when the market was making this, in the January, February time period when banks and people were saying jump out the window and sell all your stocks, the volume reading of on-balance volume made a newer low. But what I created was, instead of terms of relative change, looking at terms of percent change, we started to notice that we were getting a different reading, and we were seeing a stronger volume accumulation at that low. And then as the market starts to move up, you'll see that the on-balance volume makes a higher high, whereas my indicator makes kind of a lower high, showing us significant divergence, which is what volume should do. So we all know that the E-mini S&P can be traded by looking at the SPY, the OEX, the list goes on, inverse ETFs, SDS, options on futures, options on SPY, options on OEX. Or not on the OEX, but we have so many different ways of trading this market. It's insane, right? And so now we take a look at back again, where we get into the summertime and the on-balance volume is starting to show that the rally is looking pretty good. It rallied on higher prices. Now, if many of you have been following me, we had one of my good friends, and he's also been a client and a supporter, came into my office a couple weeks ago, and he says, John, you taught a lot of people how to use and popularized on-balance volume. You're telling me it doesn't work that well anymore. You owe it to the public to kind of let them know. And while I think a lot of other educators and people have picked up on it after reviewing and listening to some of my presentations, I want you to know that that is true. I'm finding and starting to see, for whatever reason, and I think maybe because the net changes and how it's measured, it's not as efficient as it was last year to the year before and over the last 8 years. But my indicator, as you can clearly see, we've got this kind of like situation brewing where the market started to move sideways and the volume started to sell off. And right now, look, it's starting to build up a little bit of bullish momentum in the marketplace. So we'll talk about this in, some details in lengths in the future. But I wanted to introduce to you at least the idea, while granted volume is not perfect, no indicator really is. But one thing for sure is happening. There is a dynamic change in some of the tools based on how we see trades going on. And again, I think at least the logical explanation is just simply, and I'm going to bring this right into focus with you guys. This is our Thinkorswim, and again, I'm just going to go, and many of you are familiar with how to get a scan using the PPS buy signal, or you go to licensed studies and you got your PPS buy signal, that's person's pivot study. It gives you actual buy setups or sell signals. So I've got it for looking for buy signals, right? And I ran a scan. I'm going to do it again so you know, there it is. All right. So this tells me how many stocks, or in this case, I have filtered to scan in all ETFs. So instead of going for all stocks, I go for all ETFs. And we're going to go down here and we're going to look at something together. We go down here and we go, let's see, there's UNL, natural gas, generated a daily buy signal today. And we're going to go down this list and try to do this pretty quickly. DIG, ProShares, oil and gas, ETF. We've got a Another energy. We go down the list, and we got, what's this one? ERX. Are you starting to get the idea that energy sector ETFs were starting to get bid today? And you'd probably, here's another one, FXN, First Trust Energy, Alpha Index Fund. Here's another one, IXC, another energy. All right, so let's go and change this and go by industry, change to energy, select all, and then now let's scan and see what happens. 42, if you look here with me carefully, up here it says 42 stocks at the end of the day generated buy signal. How do we know? Because we have a tab that says industry, and you can see the industry sector stocks. Seadrill Partners, Rowan, Patterson, Noble Energy, on down the list here. Let's take a look at these. Tidewater, Chevron, CVX, Chesapeake, Valero. You know these names. I don't need to go through them with you. So now I need to make a trade decision. All right, well, I teed this up. This is the OIH, and the OIH using the on-balance volume indicator. Here's one of the things that you can just change this to a weekly chart, which is kind of interesting, guys, ladies and gentlemen, because I look at this and I go, well, let's see. The price right now is near the highs. The on-balance volume is not near the highs. And by the way, if you don't know how to read this, that book that I shared with you, Mastering the Stock Market by John L. Person, that's the book to get that will teach you a huge entire chapter on how to use this tool more efficiently. Now, one of the things that I like besides OIH is CVX was on the list, right? So CVX, and we're going to go change this over here to a daily chart, and yep, sure enough, there it is, a buy signal populated, but not a lot of volume. ERX, let's take a look at that. A 3-time leveraged ETF in the energy space, ERX. Let's try that again. There we go. And you know, what I like to see is while I've got a strong accumulation of energy stocks, it says there's money. It's not just John Person and 2 other people buying energy stocks. The sector's moving up. That means money's being thrown in that area, right? So with that said, guys, ladies and gentlemen, by the way, it came right against the ERX, fell down, as you can see right here. It's come all the way down to what I've got as the person's pivot, monthly pivot. Green is support. It came and it hit support, and now it's generated a buy signal. Now, we have an uptick in the OBV. Well, let's compare that to my indicator, and here's one of the things that we would be looking at. Number 1, all right? So it's interesting because OIH at this point in time has was the first one that we looked at on Thinkorswim. Now this is TradeStation, and this is with my proprietary volume indicator, and here is volume histogram just to compare apples to apples to apples. This is on-balance volume. And this is a momentum indicator that has to do with price, all right? Now, this is a buy signal, and you know what's really cool? You see the PPS buy signal on Thinkorswim, got the same indicator on TradeStation with a couple other bells and whistles, right? But I want to focus in on the volume right now with you guys, all right? So I'm looking at this, and I'm starting to see the volume on my stuff improve, but not dramatically, right? And that kind of reflects this as well. Let's look and change over to ERX real quick and see what that looks like and compare the apple to the apple and go through how does my volume indicator and the OBV and how do I make trade decisions. Well, number 1, I like a heavy concentration of stocks in a sector or ETFs being bid up. Next, I also like to see an accumulation of volume. Now, I'll probably at this point wait for a day or so to see if the ERX can clear some of this overhead resistance, even though it's in a PPS buy signal, or I'm going to wait for my volume indicator to get positive. Right now, It's just showing it's it lifted off the lows. It's not really giving me the loving feeling that this trend is getting ready to break out and go. If it was, by the way, it would look something like it did in the past, and I'm going to just bring that into the focus here. So let's compare past performance. Not that we want to say it's indicative of future results, but clearly you can see that we started in this volume momentum or percentage type indicator. What we did see back here when we got another buy signal in November, right, is that the histogram component started to get less negative, right? Now, while it's getting less negative, the on-balance volume is getting more negative. It's making newer lows. So that right there is kind of like the key dead giveaway. Then we get, as many of you are familiar with, an identification of what we call a high closed doji. The high closed doji is indicated by this orange bar right there on your screen. Now again, I told you the TradeStation's got a little bit more bells and whistles. It gets a long entry. You can see there's the arrow pointing. It gets in here and it gets out there, and that's a different story for a different day. What I wanted, again, focus in on is, are there tools out there being developed for the new millennium trading? And as you can see, that when this thing fired off a buy signal via PPS or high closed doji, what did it look like? Well, our momentum indicator confirms it, number one, but on-balance volume comes to the party about 2 weeks later, right? This not only gets a moving average crossover, but I already shared with you that the momentum was rising already. So it really gives us a higher degree of confidence that, hey, if I'm going to buy something, I want to see if there's some sustainability, some power behind it. Now, here's your volume histogram. And once again, if you're confused, if you're frustrated using it, I don't blame you. I mean, I don't know what it really tells us anymore. Because of the fact, what does this tell you? I mean, I can expand this up all day long, and I can look at this, and you can clearly see the difference in the momentum readings, all right, of the volume, and a nice little trend to the upside. I don't know what the heck this tells you anymore. So I didn't want to get too down on volume histogram, but I am telling you that coming into 2017, we're seeing changes in the way that we analyze the markets, and there are new tools in dynamic concepts that are working better in certain conditions in the marketplace. Now, when I said earlier, things have changed, I hope today's presentation has showed you that things have changed. It's very unique to find what we're measuring, how we're measuring, but yet it's got to be true, because this sharing, for example, of the market trending up and it's showing a higher high, and a lot of people saying, yeah, this looks great, it's breaking out, and all of a sudden it just, we see a little mild puke. And over time, we just start to see the same thing, little mild pukes, right? And then all of a sudden, it starts to look a little bit better, and we get buy signals, and we get a nice strong move, and then the market goes up, and then over the summer, nothing really happens. And as the price does nothing, right, but the on-balance volume makes a newer high, this thing's warning something's changing, and then we get into a period of decline. And then all of a sudden, we get a positive reading on the indicator, and then the market launches off, right? So meanwhile, we are at a point where, like I say, we're starting to build a little bit of accumulation in this sideways range, and we see a launch in the market as we had a very nice positive day. So anyway, the point being is, if I want you to understand there are tools out there that are being created, I think, to help get ahead of and remember what kind of an environment we are in. Computerized trading, and there's algorithmic trading. There's people out there that might be able to combine the volumes of maybe options on an underlying market to find out, is there really buying going on with the institutions? And I think when I look at as a creator and an innovator in the industry, and many of you know that, Tom saw my work, and Persons Pivots is on as an indicator on Thinkorswim. The PPS indicator, I just demonstrated how I use it efficiently for not just day trading E-mini S&Ps, but running scans to find out what the concentration of buy or sell signals are in what areas or sectors. That's pretty crucial. So this is the kind of thing that we educate clients with. We sit them down, we focus in on them, we say, listen, these are indicators that are working in today's environment that make sense, that aren't expensive, they're not overburdening you, but they're helping you. And that's the whole point of trying to get things to the general retail public, to get them more engaged and to see better results. And that's why I think Tom Sosnoff, he started Tastytrade just for that purpose, to engage the general public and, an important launch information, as well as myself with a product that I wanted to introduce you to if you're not familiar with it. This is the weekly thoughts and observation. It comes out every week. I run my own scans. I look for high probability, low risk trade setups. We put out stocks, we put out option strategies, we go through a detailed list of things, and we put that out there. We follow them up by email alerts as well, and so that you have it. And I tweet that there was an email just in case someone's in a meeting and they're not sitting and staring in front of their email waiting for John Person. But these reports every week come out on the weekends so that you can prepare for it, and we back it up by a video explaining the trades. Now, I started this as we have a live trading room, and I started this as my thoughts for the week. It wasn't, we had a phenomenal first half of last year, and the second half wasn't bad, but being thick-skulled and not really thinking it through, I didn't really want or wasn't developing this into another advisory service. It just sort of kind of became on its own and did just that. Institutional clients are now using it to get ideas and sectors and in trades to be in. So that's very important for you as a retail trader to know. So what I did is I said, well, I want to take responsibility. We have an account, we track record, and we put this together, and we started August 1st. It's almost like suicide, right? You saw the last chart. We started doing this August 1st. After the market, we had so many phenomenal buy signals in this period. It was incredible. Should have retired at the end of the year right there. From here to there, phenomenal. We had more trades. We had another leg up. It was fantastic. And then I decide, hey, it's doing so well, let's start an advisory service in the worst time of the year. The market doesn't do anything until after the elections, right? So what has happened? I started the track record as of August 1st. So I'm just giving you the history of this, right? So as of August 1st, looking at, one of our very first trade was Bellator Energy, Tiffany's, and just going down the list. I'm going to go, if you're interested in seeing this, it's published and put in. Even up until just yesterday, when we had a trade in, where are we? Murphy Oil. And Tom and I kind of talk about this trade in Murphy Oil because, stepping in front of earnings, what do when you're up, about 2% on a trade and you got a 10% implied move coming and options aren't liquid? You get the heck out of Dodge. So anyway, a nice percentage change as well as point change for the trades. And it really has, we take responsibility for this as a swing trading platform. Now, I think a lot of people are looking for the like a longer term approach to the market, and we have more holdings for that. A couple positions we have on right now, by the way, just happens to be Colgate as well as NRG Energy. I'd like to take this moment to just punch up NRG and just show you how we put it together. you guys will probably be going, I bet you I know where John got the idea to buy NRG. You probably see it right here. And you'll probably notice that NRG, and I'm going to change this over because it was based on a weekly chart, not daily. All right, here we go. All right. So, again, I think case in point, I feel for you, and I hear everyone talking about this volume histogram not being as an efficient tool. I get that. But, OnBalance Volume, as I've been teaching, is a great tool. I'm not going to lie to you. But I think there are, in this environment, we are seeing better ways of looking at the market, and that's what I put together in our weekly thoughts and observations. So clearly, this little volume indicator, as many of you can see right now, has a little moving average crossover. As the market started to go down, right, OnBalance Volume is making, you can see it, it's making lower lows. And my thing is starting to show, wait, this is not making. The momentum starting to rise. We don't have a buy signal, but it's starting to show a change in the percent change of volume. We're starting to see a change of the guard. We started to get a positive change in the market right there. Well, that's great, but I waited for an official buy signal, a high close doji on a weekly basis, bought the snapback, and we were in the trade from there, okay? So this was our buy, this was our entry. We did scale out of half of this trade, and it was awesome to get out of half the trade, and then we've jammed the stops up, and to hear that this stock was in the news. I mean, it's not a home run, but it is one of the holding that we tried to do of scale out and then hold and trail stops on the balance of the position. At this point, I'll be honest with you, I'd be praying for a pullback. This is NRG. It is in the utility space. And what I say is I'd be praying for a pullback, I guess, in the next few weeks if we can. Maybe come in, fill this gap down there, and maybe I'll get back in on the other half and then add to the position on a pullback, maintaining stops under the market. The point that I'm making is we have volume accumulation that was helping us ahead of time relative to OBV, and I don't know what the heck this volume histogram teaches us anymore. I mean, I think it is something that's unique, that perhaps this being in the space of utilities, guys, ladies and gentlemen. I mean, again, here's the XLU, and I like to be fair, so let's go. I think we just lost our OnBalance Volume. Let's get it back. Format, let's auto scale it to fit in here. Let's get it going. Close it up. Here you go. All right. So if you look at the utility sector, I mean, obviously NRG is well outperforming its space, right? But noting that while this thing started to show a little bit more positivity, again, I have no clue what the volume is trying to tell us. I don't know. But there are tools out there right now, and we are seeing them, and I'm pretty sure that not only does the PPS, which on Thinkorswim, it's refreshing to see the arrow right here, and everyone can see that arrow, and let's just be as we are, and go in here and go XLU and change this up from a daily chart to a weekly chart, and by gosh, here's our PPS buy signal right there. Let's go look at NRG, and see what that looks like. And sure enough, you can kind of see there's the buy setup the same week we got in. Here the OBV looks a little good, but as that market pulls back, it gives a different picture, So it's and when you look at different markets, that's why I think an expert eye can help say, hey, we've got some good stuff going on. With that said, here's a couple things that I wanted to bring to your attention real quick. All right, so just to give you a flavor of the weekly thoughts and observations real quick, if this fits what you think you're looking for, right? I always start with a weekly positive thought. And I'm not saying this was intended for maybe Donald Trump to read. A person's greatest virtue is his ability to correct his mistakes and continually make a new person of himself. No, It just so happens to be something that I think traders need to correct our mistakes and continuously make a new person of ourselves. So anyway, Chinese philosopher Yang Ming Wang from 1529, so it's not something new. I always start the week with a positive thought. Observations, where are we for the week? Kind of an analysis of the market. We're looking at, financials have pulled back, metals and minings and energy stocks have gained in the XOP, and so we go through different things, and as we pointed out that we are thinking that the market, if it's going to see any type of that's just focusing on what we were talking about, if we're going to see any type of sustained breakdown in the market, we gotta see closes underneath these weekly lows. Otherwise, a close over that weekly high, and we've got a potential new leg coming, right? So we are given some broad information on what's happening. Quarterly pivots for the main indices out there. My technical observations comparing how many stocks are above 10-day moving averages, the McClellan oscillator, for example. And we're going to go down and we're going to talk about things looking at like IBM, that it might have resistance up near the monthly pivot around between 175 up to the old highs of way back when, and then taking a look at the volume condition of the market when it gets up there. Well, this week it got up there, by the way. And then we list a few things like, for example, Intel, what our expectations are for a market movement. This is a monthly look-see, seasonality, volume accumulation. We talk about what the implied volatility, the market is pricing in a $1 move for Intel, by the way, from last Friday's close. But I think that Intel honestly has the capability to break up as high as between a 39 and 41 area. Now, this is this week's issue, right? This came out Sunday for all our subscribers. Google. I talk about Google because it's got earnings, and I have a mixed feeling on Google. I'll share this with you right now. I have a mixed feeling on Google, and I think if they do report on good news, it might present a better trade opportunity after earnings from a premium selling position. It's just neutral for me. But here's a newbie but oldie, GoPro. We came out with this on Monday. It had a daily high close doji buy signal with an uptick in volume. How does that sound to everyone? Low risk trade, upside limited to 1080. Let's take a look at that real quick, because it kind of had an interesting little pop in the market that let's just share with you where we came up with that idea real quick. And we'll look at GPRO. I mean, it's just GoPro, but we did have, and we'll change that to a daily chart, right? So looking at the volume indicator, and then clearly you can see that the histogram, GoPro, let me get this back into focus for you. It's been started as this market's gone down into the lows. We finally got a buy signal here, and it's just been scraping. It hasn't really gone anywhere. So how did I, just out of curiosity, pick this one out of my head? Well, I said it had a high close doji. Monday it pulled back here, and it was really due, and I don't know, again, what this volume histogram teaches anybody anymore. I mean, I wish I could tell you, folks. I can't read it. It's flatlined, right? But I know all of you can see the green histogram. You can all see that the lines went positive in the volume indicator, right? You all can see this, right? That's kind of cool. Now, the on-balance volume did start to move up, but as it struggles right in here, my indicator's a lot stronger looking than this indicator right there. Let's take a look. I mean, to be fair, this isn't breaking out yet, right? This is. It's a lot stronger. That's the key. That's what I'm trying to suggest. We had the daily high close doji on an uptick in volume. I mean, very next day, it's not a big deal, but it was up 10% on GoPro. The biggest move that GoPro has seen since from whenever, right? Now, again, it was a good identification, and these are the kind of things that we like to pick up and give as far as ideas to our traders. So again, here's another stock I'm going to just share with you guys. You might want to watch this. We're looking for Whole Foods, earnings on 2/8. It's entering a seasonally strong period of time. It's in a monthly buy mode, but it's in a weekly and daily sell mode. So I'm looking for this to either generate daily or weekly buy signals by Friday, or wait to see it close back above 31.25 level. So what does that mean? So I just want to give you an education on how this is a more useful product, Whole Foods, right? If it closes, now today we had a high close doji. We have an uptick in my volume indicator, which is pretty positive, right? Look at the volume indicators getting positive. But what we want to see is what? Confirmation the darn thing can break out. And if it is going to form a double bottom, right, shouldn't it break out of this old resistance and then get some giddy up and go? So while the volume is looking accumulative, we need the price action to move. So y'all keep Whole Foods, and we're going to change this up on a weekly chart. You can see what I'm referring to real quick. All right. So now that you see the weekly chart, the volume doesn't look great, right? Relative to OnBalance Volume. OnBalance Volume, I mean, if you think about it, wow, this thing looks great. It's going, it looks great. It's going to go. And all of a sudden, while OnBalance Volume's making, and this is the point that I was making earlier, OnBalance Volume making a higher high, maybe giving traders a sense of false security, and this indicator is making lower highs. This is the momentum indicator of volume, right, in terms of percent change. So there is a tool out here, folks, that is being widely used, more institutional, and it's something I created. And when we get, and I want you to focus, because just because it's entering a seasonal time frame, you know, there's an old phrase, don't tell me what stock to buy, tell me when to buy it. I tell you what, if this thing does get a breakout, a close over those doji highs, it'll be a high close doji, and if we can get a launch in the volume indicator, I put an A+ on that, and this thing could see a continuation to the upside. One other reason you want to look at this possibly is that what? You got an upside, a pullback, and then if it is going to launch, you want to see the market give a buy signal and a launch to the upside, and we'd want to see positive volume go with it. Other than that, then we have a strong shot of 35, right? So these are the types of things that I go through in the weekly to prepare you with a lot of stuff. Here's the trade on Murphy Oil. We'll get down. Another trade setup that we explain, Murphy Oil. We want to be in at 31.42, stop 29.63. Target 34.80 by March. Here's the problem with that trade. We got filled Monday. Nice setup. And the problem is we're entered at 31.42. The market's now trading around 32. You look at your earnings are out tomorrow. Am I afraid of earnings? Well, let's see what the market's pricing in. A 10% move. Guys, it's a $3.14 move either way. It's either going to open up and stop me out, or it's going to go up. And either way, I'm up 2%. Why take the risk? I can't reduce cost basis. I can't hedge. Options, they don't even have weekly options. So I like the energy sector. I like the setup. What did we end up doing? Here's exactly what we ended up doing. Well, you know, as one would expect, we sent out an email alert. Yesterday, orders in Murphy Oil were filled, and the stops are there. While it's a seasonal strong time and crude oil prices and President to keep blah, 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 we're faced with earnings after the close. At the money straddle price, anticipating a 10% move. Since we have a slight profit, I'm recommending to exit the trade. I would alternatively look at a collar strategy to protect, but options are thinly traded in this stock, and it's just best to liquidate and move on. So how many of you are upset that you get a 2% move overnight from one day to the next on a stock? Now, if you're only an options trader, this wouldn't, it wouldn't apply to you, but we come up with high probability trades. So anyway, We say liquidate. I don't know when you're going to get the email. Actually, the stock went a lot higher than 3206. So anyway, neither here nor there. But we did liquidate the position, and I feel good about it, right? So then we move on. That's part of the service. And if that's something that you're looking at, I think, for starters, just go right here. This is the annual subscription. This is the special web link, Person's Planet. It's linked down there, and you can get that information right now and sign up immediately, and we'll get you started. It's going to be an exciting year. I think you're going to need this, and it's going to help you. This is a powerful tool that has, from top to bottom, seasonal charts, seasonal analysis, specific trades, volume analysis, broad analysis, stock, as well as commodity information. It's weekly, comes on the weekends. There's a video that you can read, as well as you have the written report emailed to you, and you have the video that you can watch as all part of what we call our planning and scanning. And you, of course, have access to on-demand replays of past issues. So besides that, email alerts on execution orders, and of course, we combine both stocks and option strategies. So with that said, I highly encourage you to take advantage of this offer. Get in tune with John Person. And I'm going to here to tell you the news about Tom Sosnoff and his new launch, not just of Tastytrade, but Tastyworks. Boy, I'll tell you what, the combination of what Tom's going to be offering and has put together, two really unique things that have changed in 2017. The way we trade, where we trade, how we trade. And now I hope today, and when Tom's session begins, I think, it's going to be engaging and fun between the both of us because, folks, Tom and I have known each other a long time and have deep admiration and respect for each other. In the meantime, folks, let me say this. Click on the link, personsplanet.com/reports with an s.html, and you can read through what we've put together. I've given you an example of this week. Nothing special, but you can get and sign up. We'll get you started. If you don't like it after a couple months and something's changed in your life, you can always cancel. So, any event, the recordings of what we've done are available there. And finally, I'd like to mention this is Tastyworks. And I think one of the main things that everyone's talking about and what Tom wants to talk about is pricing. This is impressive. So we are excited to have Tom come in, and in the next session, you will be listening to Tom and myself. In the meantime, I thank you very much. I look forward to serving your financial needs on a serious note as we plan and trade together in what promises to be an incredible year in 2017 under the Republican sweep, or AKA Trump administration. That concludes my end of the session, and I hope everyone has a great evening. Thank you, and more importantly, I hope you learned something tonight. Thank you.